It's Enso here with the Enso Speak Let's Talk. In this video I wanted to discuss what's going on in the market and everyone's speculation of a 2021 market crash, what I'm gonna do in 2021, how I'm gonna take care of my portfolio if there is even a market crash, and what defense mechanisms that we do when there's a market crash. And then we're gonna take a look at some history to kind of predict if there won't be a market crash. What we do know is the market has been really strong in 2020 headed into 2021. But with the whole COVID virus pandemic going on, then new presidency, fight over the House and Senate, there's a lot of speculations that there might be a market crash, which I can totally understand. What we have to realize is that we all are human, and humans are going to be humans, and as history has proven to us, every time the market crash, it comes back. So my thoughts on it is I don't believe that there will be a market crash in 2021. We may have a correction of about 10%, but that isn't a market crash. That is simply a correction. The market has been going up steady. Even in the beginning of 2020, when the market dropped by 23%, we got all the gains back within 6 months. So the market has been steady chugging along. I understand that the economy is in turmoil and the economy is ripped apart, but it seems like the market isn't getting it. Like the market is just chugging along. So I believe people are still out there spending money, so the market is consistently going up. So with that being said, normally when the stock market crash, we all tend to panic and sell, the world's ending, let me get my money out. Actually, that's not what you want to do. You actually want to buy more stocks. If you would have bought stocks in March, when the market dropped by 23%, you would have locked in a lot of gains as of right now. So with the new presidency coming up and COVID vaccines are rolling out, I think, and we all can probably agree that there is no getting used to COVID, but we are used to COVID, so to speak. So that isn't gonna shock the market. Throughout the summer, there was a lot of rioting and stuff going on in the country, and the market got used to that. So I think the market is used to the turmoil that's going on in the U.S., but everyone's afraid right now because of what might happen with taxes getting raised. Which, if you look at it from economist perspective, it wouldn't make sense to raise taxes right away when you're handing out stimulus check. You can't stimulate the economy but then raise taxes and say, okay, we're going to give you this money, but we're going to tax you higher, because that's actually going to take the money back that you just gave in the stimulus check. So me personally, I don't believe that taxes will be raised for at least 2 years if they are raised. I can't say for sure. I'm not in the Senate, I'm not the president, I'm not in the House. That isn't what this video is about. So I think that the market is going to continue to climb. I think that we all should continue to buy stocks. I always say definitely buy on red. And with the market crashing, that isn't a bad thing. Really, the market crash is the best opportunity to buy. You know, if we could go back and get March prices on stocks, that would be a blessing. But I just don't think the market's gonna crash again. Maybe have a correction, and that's about it. If you take the closing date of the S&P on 2019 and times it by 25%, because the magazine The Economist say that 20% of the US dollar that's in circulation right now was printed this year, aka printed, because now they just changed it on the spreadsheet. It isn't really printed anymore. So 25%. So take the number at the closing bell and times it by 25%, and I think it comes up to like 4,000 and some that the market can go to. So really, per that equation, and that's a very simplified equation, the market is undervalued right now. I think we're all getting accustomed to the COVID lifestyle, so to speak. That sounds weird even saying it, but I think you all get the gist of what I'm trying to say. We're getting used to all the mitigations, and it's some people hate it, some people follow it. That's not for me to decide. But I think as human beings, we're all getting used to it. So that isn't gonna shock the market, because the market will have stayed down. If the market was fragile as everyone think it is, the market will have stayed down. But the market continues to climb. We're making all-time highs again in the market during this pandemic, which it may seem crazy, but that's just what's happening. And as far as the past year in 2020, more people started investing more in 2020 than they have in the last 10 years. More brokerage accounts have been open in 2020 than it has been in the last 10 years. Because it's more easier to open a brokerage account. Like Robinhood, they opened like 3 million brokerage account last year. So more investors are getting into the market. And then once you think about retail investors such as myself, like, everyday people, even millionaires are considered retail investors. We only make up 25% of the market, and the other 75% of the market is hedge funds. The big wigs who make like mutual funds, and they have a lot of funding. They have collective funding from all people who want them to invest their money. They make up 75% of the market. You understand? And as you think about it, it's so simple. People are still gonna retire. No matter what's going on in the world, people still have to retire, and they still have to have a vessel to drive their money. We can't just pour all the money out of the stock market in a stock market crash, because then where do we put our money? Everyone can't buy into real estate. Even if you want to buy into real estate right now, the housing market inventory is the lowest that it's ever been, because interest is so low. Houses are being worth more now because the housing market inventory is so low that the price of houses are going up. So no matter what goes on, we still have to have a vehicle to drive our money. So when a market crash happens, it's not a bad thing at all. I just don't think that there's going to be a market crash in 2021. I do think in the first 3 months of 2021 that there will be a correction. So 8 to 10% the market will go down. Now, let's jump into a little bit of history, and I want to just show you all why you shouldn't fear when there's a lot of volatility in the market, and when the market do drop by 10%. It's never fun. It's never fun when you look into your brokerage account and you have lost a lot of money, okay? And I do understand that if you're up in age, you don't want a chance losing 10, 15, 20% of your 401k or your Roth IRA or whatever investment account that you have. I totally understand that. But we're going to jump over and take a look at history, and I just got a few pointers that I want to point out, and you all give me your thoughts on it. But before we do that, if you can hit that like and subscribe button, let me know if you like the content that I'm putting out in this video. Hit that like and subscribe button. Let's get into it. Okay, this is just some history of the stock market and the stock market crashes that happened. In 1928, this was one of the biggest crashes we had. This was the Great Depression crash. In August of 1929, the market started dropping, and it dropped by 24.8%. And right here, it tells you all the recovery time. The market did recover, but it took the market 25 years to recover, right? But when you think about the Great Depression, they didn't have the technology we have right now. Everything was just different then. It was just a war going on, so that was a big part of it also. Plus the market, it dropped for 3 years. All right. Then you go to 1987 when Black Monday happened. The market dropped by 22.6%. It did take 2 years to recover, but the market recovered. Same thing in the following years. The dot-com bubble took us 6 years to recover after the market dropped 27%. The financial crisis of 2008, it took us 4 years to recover, a 20% loss. But what's fascinating to me, as technology have grown, it seems like people are getting smarter, and through YouTube and the different platforms that let you know about stocks and investing, seem like people are taking advantage of it. Because if you look at the COVID-19, now COVID was different than any other market crash, because literally we hadn't dealt with a pandemic like this. No one knew what was going on. It was one of the first times that the U.S. been shut down. It was just a scary time. But still, with all being said, the market started crashing in February, and it hit rock bottom in April. The market dropped by 23%, and if you look at these percentages, 23 is right in the middle, so it's not like it only dropped a little bit. The market dropped by 23%, but miraculously it only took us 6 months to recover. Because what people are learning is when the market drops, you buy more. You know, when the market's going up and everyone else is being greedy, you don't buy. When everyone is panicking and selling, you buy more stocks. So when the market's going like this, the market move up and down in an upward motion. But if it dropped, this was like the drop in March, right? And then the market continued to climb. If you bought right here, you got all of these gains going up. So that's what I mean by like a market crash isn't the worst thing that could happen. It's gonna happen. What I do believe is gonna happen in the first quarter of 2020. I do believe that the market will do something like this. Okay, the market was going up, it's going down. I do believe there will be a little correction, if you get my gist. Like right there, there's going to be a correction. A correction is about 10%. You know, so I do believe that will happen. I don't believe that we're going to see the 23% crash again, because that was caused by the pandemic. We were uncertain of a lot of things. We didn't know what was going on in the world. COVID was new. It still is new to all of us. But what we have learned is we've learned safety procedures. We've learned that a vaccine is coming out. We've pretty much learned how to social distance. We've learned about masks. No matter what side you're on, wearing masks or not wearing masks, that's not what I'm here for. And I think what we've really learned as humans is we adapt. Even with COVID going on, we realize that no matter what, we still have to wake up and live life. Because I don't think everyone wants to pull their money out of the stock market and then we beat COVID. Because then what happened? You have nothing left saved. So I think as human beings, we're adapting. We're getting smarter. Everyone's learning that when the market dip, you buy. So I don't personally think that there's going to be a market crash. I simply think that there will be a market correction. But if there is a market crash, I still say buy. because over the last span of 100 years, you got almost 100 years worth of data right here. The market has continued. We've had these 5 big crashes. So going from 1929, the Great Depression, first the market was flat like this. Then it started to climb. Then it dipped with the depression. Took a while to come back. Dip, went up, dip, went up, dip, went up, dip, went up. And that's how the market moved. With all the dips, the market is still moving in an upward motion. And you definitely always want to buy the dips because that's the bottom. I call that the super sale right there. Y'all let me know what y'all think about this content. If you like, make sure that you hit that subscribe button. Share with a friend. I'm going to keep putting out content daily. Let me know down in the comments if there's anything that you want to know about the stock market, because I'll definitely look into it for you. Until next time, Enso, let's talk market crash.